Hello guys, welcome back to GolgiFx, and this is your boy Golgi. So if you are new to our channel, please like this video and subscribe to our channel. Let's get into the video. So in today's video, you'll be adding up all the knowledge that we acquire from the previous video, and you'll be using it to create a very powerful strategy that I've been using. So let's get into it. So the first thing you do is you add your indicator, that is the Rsi indicator. So if you go up here, you see the F sign, you click on it, you scroll down, you look for relative strength index, and you change the period to 8. The period have to be 8. After that, you click done. So this is our Rsi indicator with the period 8, and what this is doing is it is giving us divergence and hidden divergence. So this indicator is going to help us with the divergence of price. So in our video we talked about overbought and oversold. This is what you are going to use to identify those points in the market. If you also look at our chart here, we are going to use the market structure that we learned, and also we are going to use the reversal patterns to that we learned. So we are going to apply everything that we learned in our previous video. So just stay calm and enjoy the video. So in our previous video we talked about market structure. So market structure is when we see the market making higher highs or higher lows, or lower lows or lower highs. So the first thing that we are looking on the chart is we try to identify our market structure. And if you look at this point, you can see the market is making higher highs, higher highs, higher highs. So that is the first thing that we look at. You try to identify the market structure which is making higher highs. The next thing, we try to look at our indicator, if it is also giving us higher highs. If you look at this point, you can see the indicator also giving us higher high, clean highs, higher high. So what does this mean? So this means that we can see that the market is continuously making higher highs, but indicator is failing to make higher highs. So this thing, it indicates that there will be a shift in the market. We talked also about that there will be a shift in the market. So anytime you see the market making higher highs and the indicator making clean highs or higher lows, it gives us a sign that the market is going to reverse. So when we see this, how are we going to trade? In our previous video, we also talked about the reversal patterns. When we see the market giving us head and shoulder, you will be trying to wait for the market to break the neckline. If you have not watched that video, just look at the description box. I'll post all the videos there. So we also talked about reversal pattern. So at first we said if we look at the market, we can see the market is making higher high, but the indicator is failing to make higher high. So that indicates that the market have been overbought. The next thing is, then we try to look for what? The reversal pattern. And the reversal pattern is what? Head and shoulder, double top, triple top. These are some of the patterns that we look at. And currently, if you see, it confirmed clearly that the indicator is failing to make higher high, but the market is making higher high. So after that, the next thing you'll be waiting for is our what? Our pattern, our reversal pattern. And we can see clearly we have the head and shoulder forming here. You can see this is the head, this is one of the shoulder, and this is one of the shoulder. So after seeing the head and shoulder forming here, you try to put our line below this point. We talked about that in our video, that you will be looking for entry below this line. So let me put the line there so that you guys will see it. Below this point. So our entry will be below this point. So anything below here, below this red line, we can take our trade there. But we are not going to enter this trade. We are only going to enter when we see the market below this point. So let's see if you see the market below this point. Let's forward. Let's go through the chart. You can see that currently the market have not fallen below this point. So if this was a trade, you wouldn't have taken this trade, but rather stayed out of the market. So clearly you can see that if we try to apply all our trading principles or the method that you have studied in our previous video, the probability of us losing will be very low, because this trade, you only be taking the trade when we see the market below these shoulders, these two shoulders. But the market did not come below these two shoulders, so we did not take the trade. So that's one example of this. This is a failed divergence pattern that we are seeing here. So let's try to see if you also get an example that strategy worked very well. Let's get into it. Let's see. Let's look at this point. You can see here, if you look at the first thing that we talked about, you look at the market structure. You can see the market making higher, low, higher, and we had what? Clean highs. But let's look at the indicator. Higher, low, lower. The market did not make higher high, but the indicator made what? Clean highs. And if you see this clean high, the next thing that you will use is this clean high part of our reversal pattern. Yes, it's part of our reversal pattern. In the beginning, we talked about clean highs. So clean high is part of our reversal pattern. And when we see clean high and when we see something like this, what do? We put a line below the neckline, and this is our neckline. So let's put our line there. Which means that anytime we see the market break this red line, we can look for our trade. And the market break this red line, retest, and the market sold. So we could have taken our trade somewhere here or somewhere around this point, and we could have targeted below at this level. So you can see the market sold and our strategy works very well here. Let's try and see if you get another one. Let's look at this one too. Let's look at this one. You can see this one. If you look at the market here, you can see the market was making lower, lower, lower. But what was the indicator doing? It was making higher, higher, higher. It was giving an sign. The indicator and price have to be the same, but they are not being the same, or one is going the opposite direction. So what you then look for what? Your reversal pattern, which we talked in our previous video. So we see our reversal pattern nicely from here. We see the market break. We can see some market making some clean lows around this level. Clean lows here. And also the confirmation was that it broke our neckline. So let me show you where the neckline is. It broke our neckline. This is our neckline. This is our neckline, this level. It broke here. So we were looking for entry to the upside, and we got it here. You can see we got it around this point, and the market went up. You can wait as the market break our head neckline. You can wait for a retest and you enter. You can wait for a retest and you enter the market. That is one thing. Or you can just enter the market around this high and put your stop loss within this range. 15 pips. You get your 15 pips around this point and you take your trade. And from the strategy, you can see that anytime the market breaks its retest and it goes higher. Let's try and see if we can see another example. Okay, we have another one here. Let's look at this point. You can see, look at the market structure. The market is making higher lows, higher lows, higher. But what was the indicator doing? Higher lows, lower, low, lower. The market was not making exactly as what price was making. The price was making higher, high. Indicator was failing. Fine. What do you look next? After that, you look for a reversal pattern. So you can see here that this a reversal pattern. We can see clear head and shoulder. So we have seen a very nice head and shoulder. What are we going to look next? You wait for the market to break the neckline. So let's put our red line below the neckline. You can see as the market break this neckline, the market sold. This one, the market did not retest, but the market sold straight away. So sometimes the market can retest and sell, sometimes it will sell straight away. So this is a strategy that you can use. There are a lot of ways you can use this strategy. So this is an example that I've given, and this is an example. And if you want to understand this example or this strategy very well, you have to watch the previous video and understand what market structure is, what reversal patterns are, and I'll link it in the description below so that you watch it and you can come back and practice this strategy. Thank you for watching this video. Please subscribe and like our video. Bye bye.